Something unexpected is happening in Southwest Florida's housing market right now, and almost nobody is talking about it. Home prices just jumped in Collier County. The median price surged 17.5% this week alone. At the same time, inventory has started to decline across both Collier and Lee counties, just as buyer activity is quietly picking up. After months of price cuts and climbing inventory, this might be the first real sign that our local market is stabilizing or even rebounding. And while headlines are still focused on the national economy, talking stagflation, recession signals, and rate cut speculation, something very different is playing out right here on the ground. So today I want to walk you through what I'm seeing in the local numbers, what this shift could mean for both buyers and sellers, and how the national stories might intersect with what's happening in Southwest Florida. Let's start with the local data because that's where the biggest surprises are showing up. So in Lee County this week, we have new listings at 563. That's up 2.4% week over week. Now, at the same time as that 2.4% increase, we also saw pendings, as you can see at the bottom here, 413, that's up 9.5%. So those two actually balanced out, and that's why we see active inventory at 9,289 going down 2.3% week over week. We also had solds decrease down to 315. That's down just about 14% week over week. Again, solds is a lagging indicator, so about 30 to 45 days ago is what that is really indicating. Whereas pendings, on the other hand, are what is actually happening right now over the last 7 days. The median sales price also rose to $407,000 this week. That's up 7.1% week over week. And then we also had the interest rate actually go up 8 basis points. So not a ton, but still it did tick up, due mainly because of all of the concerns over the tariffs that have come in recently and the stock market declining. In Collier County, we have very similar data coming in. New listings, 204, that's up 20.7%. Again, 20% sounds like a lot, but with numbers only in the low 100s, that kind of percentage point can be very easily swayed by, 20, 30 homes. So solds also down again, similar, 95, that's down 20.8%. Again, that's a lagging indicator. And then our leading indicator for Collier County is not so great news because that's showing that buyers are actually starting to pull back a little bit in Collier County. That's down 14.6% this week, down to 129. Again, with the numbers being so low, 14% sounds like a lot. It really would not be as much if you consider the numbers that we have in Lee County. Median sales price here as well did go up 17.5%. We're back up into the 950,000 range. Whereas last week, we actually saw the numbers go down into the 700,000, high 700,000 range. So we are starting to see it swing back up to the upper nines and then low $1 million range. Active inventory here also decreased down 2% to 3594 week over week. The same story here, even though we have new listings ticking up almost 20%, pendings down, we still see active inventory declining. Now, before we get into the next stories, I do want to break down a couple charts that are really important to Southwest Florida right now as we discuss what these next couple news stories going on with stagflation and the economy. So I'm going to just remove myself here and let's get into it. So as you can see, active inventory has peaked about 3 weeks ago and has been declining over the last 2 weeks. So again, this very easily could go back up, but it looks like we might be peaking out with active inventory coming on the market. It looks like buyers are getting tired of waiting and they are starting to enter the market in Lee County. For Lee County, we also see pending sales are rising the most that we've seen in over a year. So that's, again, good news and showing that there might be some sort of a rebound here for the Lee County market. And then as we look at just comparing the amount of closed sales versus interest rates, you can see this really tells the whole story here. The blue line indicates interest rates. So as interest rates went up there, where you can see where that red line is, you see the amount of closed sales declining. So that's really giving you the whole story of the relationship between closed sales and interest rates, or on the leading indicator side, it would be pending sales and interest rates. Same story here with Collier County. You can see the active inventory again peaked a couple weeks ago and has been declining. Again, this hook looks like it's going to be something more of a decline here, whereas you see any of the previous decreases really rose 1 or 2 weeks afterwards. Now we're seeing a decline for 3 weeks now, so we do have a new trend line downward for active inventory in both counties. Now, I did want to just mention the interest rates and the 10-year bond market here. You can see that white line that goes across the 200-day moving average, and this is the bond yield, the 10-year. So this gives you an indication of where interest rates are going right now. Again, that 200-day moving average is resistance. So it did actually get over that 200-day moving average today, but as we zoom out here, There's a huge pattern playing out here, a head and shoulders. If you zoom out almost a year, you can see that left hand shoulder, the head in the middle, and then it does get out of the pattern a little bit there. It breaks out to the high side on that head. But then as you come down and touch the shoulder to the right shoulder, what you want to do here is that line from the top of the largest triangle to the bottom of it, that's the head of the shoulder. You would take that line and then you move it to wherever it breaks. Now, this is indicating that the interest rates could come down from 6.9%, which is where we're at right now, down to about 6.3% over the next couple of weeks. So if you're waiting on the sidelines, or maybe you're already under contract and you're just waiting to lock in your rates, I do think we're going to see rates come back down again over the next couple of weeks. Again, this is only an 80% probability because we're using technical analysis here on charts, but that could be very well where things are heading next. And while this might look like just a local shift, Southwest Florida isn't moving in a vacuum. The bigger story is what's happening across the national economy. So jumping into the first article, we have the Fed must resist repeating past mistakes. As I've said multiple times, usually when we enter a recession, interest rates are high at that point in time. We enter a recession, the Fed is usually, the response is to cut rates to try to stimulate and boost the economy. Now, the trick here is going to be with what Peter Schiff says, we're heading into stagflation. So he's saying we're already in stagflation. The Fed is clueless. He's always been against the Fed. So again, you got to kind of pick your battles here with who you're listening to. But he's saying that all economic data points to stagflation. And if you go back to some of my videos from a year or two ago, I also said that that's probably where we were going to be heading. And it looks like we may be there right now. So the trick is really going to be, when is the Fed going to cut rates? Because they're going to have to make a tough decision if we are in stagflation here. They're going to have to either cut rates and just let inflation continue its journey back up again. Because if it just take the housing market, for example, if the Fed cuts rates, think of all the people that are on the sidelines right now. There's probably millions of buyers right now who've been waiting. Even sellers have been waiting to sell because they just don't have anywhere that they can actually afford to move next that would make sense for them. So you have all these people waiting in the wings for interest rates to come down to a point where it's really appealing for them to buy or sell. And then if they do cut, what's going to happen to the housing market? We're already at pretty close to all-time highs for prices. And they're, despite inventory rising a lot in Southwest Florida, compared to the amount of people who I've talked to who've been waiting and to buy, I think we're going to see, prices again increase. Maybe not quite as much as we saw in the boom, but if that does happen, now the Fed's really in a rock and a hard place because they're cutting rates and inflation is increasing. The other decision that they can make is they can decide that they're not going to cut rates and we're going to go into a recession and there's not going to be anything that they can do to stimulate the economy. So we're going to go into a stagflation recession, which can be pretty rough. I wouldn't say a depression, but can be very rough because there's nothing to boost the economy, to stimulate the economy and get it moving again, which makes it tricky to have the markets recover. So those are kind of the two options where the Fed's at right now. And right now, inflation is showing that we're at 1.4%. So that's actually below the 2% target that the Fed is at. The green line represents the core inflation, which is at 2.06, which is right along with where they want to be. But the actual true inflation, because of interest rates and where the Fed rate, the actual rate is right now, shows that we're actually below the 2% margin. And then we also have from Redfin here, 1 in 5 home buyers expect to sell stocks to fund down payment. However, if you've been paying attention to the stock market or watched any of the news lately, tariffs have really affected not only the stock market, but the bond market as well. So everybody's kind of flowing out of the stock market into bonds. They've been selling off stocks, a lot of economic uncertainty. So when that happens, they usually sell into something that's more stable, where there's a guaranteed rate, albeit a low rate. So they all sold into stocks. That's why you see the 10-year bond yield rising and why interest rates are going back up for mortgages and why the stock market is declining. So those two things are usually inversely related. So here's what it all means. The economic engine is slowing. Inflation might already be handled, but the damage is still catching up. And in the housing market, especially here in Southwest Florida, buyers are gaining more leverage by the week. If you're relocating, this might be your window. If you're selling, this is not the time to test high prices. And if you're sitting on the sidelines waiting for a better time, just make sure you're not waiting yourself out of the best opportunities. If you found this video helpful, subscribe to the channel so you can stay one step ahead without the noise, the hype, or the fear mongering. And if you got questions about buying, selling, or just want to talk through your options, feel free to reach out. No pressure, no sales pitch, just honest answers to help you make the right move. I hope to see you in the next video, but until then, stay safe, stay positive, and more importantly, stay free.